The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you guys had a good weekend. Weather's finally breaking around here in North Carolina. I actually got out on the course yesterday. First time in forever. I hope you guys were able to do some fun things this weekend also, if you could consider golf a fun thing. It's a very sadistic little sport. Unless you've ever played it, you don't exactly know what I'm talking about, but can be frustrating. Here we go. Let's take a look at the Shanghai. Now, what's going on here is we took a look at this 35.54 on the weekly unfair lows. We talked about, you know, the next shoe will drop on this thing if we can get below 35.54. We've got some news out of China, basically. Yeah, not good news. Not good news for the economy. Possibility of lowering interest rates, blah, blah, blah. They, you know, we enabled everybody in the globe to think like this quickly. Spur of the moment type stuff. But anyway, I think that was, you know, the writing on the wall for a while. But we, you know, the good news is we talked about waiting patiently until we could possibly cave in below 35.54 to start looking at this from the short side. That obviously didn't happen. So we were kind of sitting on our hands, and we had a little bit of a resistance level that we could pay attention to around 38.60 based on this profile appearing up here, especially above price action, which I was considering very, very bearish actually. So what do you do now? So, and a lot of guys out there are probably trading the ETFs in the U.S. relative to China, kind of a little bit of an ADR type analogy. And if you're looking at those ETFs on the short side, in my opinion, now you've reached a point at this stage where you've got to more than likely sit tight and wait to see if we can come back down and get back down below some of those daily unfair lows. This country and the investors in this country, remember, still have a pretty hard row to hoe here when it comes to figuring out, you know, the next government intervention, the next time they could actually unwind some of their positions, things like that. I mean, there's obviously been some short sale situations that have been enacted, but you've got 38.60. Let's just call it 38.61 sitting here. You've got to pay attention to, and on the upside, which is really cool, you've got another resistance level. If we keep edging higher, that's a very wide profile POC, which, as you know, we got to pay attention to those 40.95, and that's combined with 41.19. So you've got basically, what is that? Blah, 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 blah. Is that like a 20-point killer resistance DMZ up top here? So we blew through this one. Them's the breaks. I actually was kind of playing around with that last night. Got stopped out. Now we're kind of in no man's land a little bit. So you've got to get below 38.60 or get back up into that 4100 area to start having a ripe opportunity on the Shanghai index itself, which would allow you to look at some of those ETFs, going back to those USA ETFs, to start playing around with the Shanghai on the short side. So that's the main squeeze overseas, as they say it. And let's take a look at the Nikkei. This has been something, again, very yen dependent. Devaluing yen or rising yen on the US dollar yen trade, which means the devaluation of it, doesn't hurt this situation. Nikkei revalues itself in weaker yen, 2660 sitting here. And it looks like this thing is kind of on the launching pad again, consolidating around these unfair highs on the daily and actually the weekly too. So you got 2660 and 2725. We've kind of crossed some of those borders. And that means to me, we're going to go back to the yen trade. And here's the long term of the end. No new information on the very long term trade. We talked about excuse me, 123.39 being kind of the ultimate stop out uncle point. We had a new profile appear, which is higher, which is cool. And now we've got, we had that orange bar start to appear, and that was on the scanner last week. I'm going to go back to this really quick. And if you're doing the yen trade, you want to pay attention to this. We had that yellow peel back going on the daily, which was early, which was telling you it might be time to start scaling out of this. Now you've got a new supply area happening here, and you've actually got some resistance that we're coming up to right now. So if you're trading the yen, I think you've got some indications that there may be some stalling here in this trade. We may have a chance to pull back into 123.68 now. If you've got a couple of points in this, I think the long obviously is par for the course. It's great. The intermediate and short term, you're going to have some resistance here. I like how these levels have kind of ratcheted up, and this is our 240, found some support here. But going back to the daily, remember, you got a new profile here. These areas have to be paid attention to. 124.72 now, and that's the way I'm looking at the end. So let's go into something that's just been flat out amazing. We're just going to hit some of the usual suspects here. Canadian dollar, this is kind of a cool situation. Target rich environment, 132.13, 14. Now you got a new balanced area. You may want to take a break from this one also. I'm still bullish on the US dollar, which is obviously, runs the show in a lot of other currencies, but now you might want to wait for some pullbacks on the Canadian dollar. If it ain't broke, don't fix it. I'm not a big fan of going short this. Here's the long-term weekly. But, do you have some opportunities to get short right now with stops above 132.14? Yes, but again, the trend is your friend. Want to try to trade with the trend. Continue to find support until the back's broken on this trade. Here's the 240. A couple of signs here. We're starting to break down a little bit on the Canadian dollar. That started happening a couple of days ago, but we knew that ahead of time, because we got that orange bar at the same time on the daily. So again, not the ripest looking trade right now for the long side. I'd take a look at that later. And let's just see if it can pull back a little bit. Here's the dollar situation. Here we go. So 98.310, we talked about that being a target rich environment, not really getting short, but just using that to take some weight off. We pulled back a little bit here, and that's been lovely. Now that we can try to pick this up a little cheaper, I'd wait patiently on the dollar. You might have a new profile attempting to appear here soon, and then we'll kind of wait and see where some new levels are. But breakouts above 98.310 on a daily, and it closes on a daily, are going to mean we're off to the races again. But right now, you just don't have the leverage, and you should be out of this trade temporarily right now. Let's take a look at gold. Had some action here, obviously. This is the December contract. Long-term trend still in decent situation here. Let me see if I can. Sorry, guys, I hit the wrong button. Let's see. Okay, there we go. All right, so again, this is the consolidation down here. To me, seemingly will drive this thing lower, but you want to try to find battle points to really make this a ripe trade. So, again, we talked about breakdowns below 1081. That hasn't happened. You should be doing really nothing on this trade right now, and you've got big time resistance up top at 11.12. Those are the two big areas to pay attention to on gold. And again, thank goodness we didn't get short early on this one. Again, we had the targets met. Here's the 240. We've got that 1094 for short-term traders sitting here. I don't like the way this is acting, but again, you're gonna have to wait till this thing dives below and starts getting some momentum. Then you could possibly retest the 1080 area. But again, the riper inflection points again are 11.12 up top and getting back below 1081, 1080. That's the situation on gold. We got to hit crude really quick because it seems like this is the talk of the newswires. But we've been talking about not a lot of reasons to take this off. The long-term trade, we want to see some new profiles up here. We want to see some new profiles up here on the daily. Not happening. Do have a lot of magenta bars lining up. I haven't seen that many line up in a long time on the daily. That does classically mean we're overextended. But the 240s regulating the trade. In my opinion, you've got resistance up at 45. You want to sit tight here on this one on a shorter term to intermediate trade. You've got a new profile that's appeared. You're more than likely going to explore that up top. You could take a break from the short side on this on the short term and wait for some higher numbers, 45. But remember, the long-term trade is really not in danger at this stage. There's the weekly. Here's the daily. There's no new profiles attempting to appear. I'll get back to my futures section. See, nothing. A couple of green shoots on the 60, but no new real long-term indications that we're in danger on the short. Believe it or not, I mean, crude oil doesn't have to be on sale. This thing could go to $30, but a lot of people are jumping on the short crude oil bandwagon. That's kind of an indicator in itself. Just be wary that we could have a knee-jerk reaction back up to 45 and even higher. So just make sure you got your stops in if you're playing that game. All right, let's take a look at the euro. This has been something that's been a little bit of a quandary to me. I got stopped out of this trade personally. Here's the weekly. We're kind of getting back above this 109, unfair low 109.50 area. I'm going to blow this up a little bit. And we reached a high already, 109.81. So I don't want to take that much heat personally. The long-term trend is still in force down, but I'm trying to catch it on that 109.50 rocker arm area. And then, obviously you got some more resistance up here at 110.12. Still love this trade from the short side. It's just, here's the 240 up top. Here's your short-term levels, 109.78. Let me pull up the scanner here so you can see this really quick. Go back to Forex. And there's our, where is it? There it is right there. So we're at the bottom of that profile, again, around that 109.50 area, in the vicinity, a little bit higher. Pretty non-directional, as you can see, gray across the board. We want to start seeing some red shoots again on the downside, and that's kind of the way we're looking at the euro. All right. Have we covered everything? Let's just take a look at November beans. This has been a moonshot here past that 955 area. Got stopped out last week myself, which hurt. I hate that, but that's the part of trading, is taking losses. That's why a lot of people in the engineering, dentist, doctor field, I mean, they're very smart people generally. We're going to talk about that when we get back. That's just a footnote to taking losses I want to talk about. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. What I was going to say as we were getting off the air there was I had a lot of experience in watching people in a kind of in a day trading room and also in a prop environment, long-term investors, things like that. You know, some of the people in some fields, engineering, doctors, some lawyers that try to or that trade for a living or get into a little bit more sophisticated investing, they haven't really had to admit that they're wrong often in some of their career choices and decisions that they've made. And trading is about, part of the game is taking losses and admitting, hey, you know what, it didn't work out, and hanging on to trades that aren't working out after you've done all the analysis and, oh God, I can't be wrong. That's very, very dangerous. And I've seen some of those folks, take take significant hits from that fact alone. So you want to remember that you always have to put stops in. I say that all the time. It's part of the game. Try not to worry about it. You know, it's the risk-reward scenario that you really should be concerned about, and that'll take care of itself. You know, throwing darts at boards and some of these automated strategies, you can go literally just concoct some crazy scheme to do an automated strategy. And a lot of times, if you've got your stops set at like 1 point and profit target's always set at 3, a lot of times the strategy will work just blindly throwing a dart at the board. So remember, losses are part of the game. And our automated strategies, you want to obviously try to tweak the entry points. That's the big deal. But allowing trades to breathe that are profitable when you can, and just wait for those indications. And taking stops is part of that strategy taking profits. You can't go wrong doing that, but you always want to let things try to unwind themselves a little bit, in a broader sense when considering what type of game you're playing from the trading side. And when I say game, I mean, what are your, goals as far as the time horizons that you're allowing trades to develop within. Let's take a look at the XLE really quick. All right. This is something I've been paying attention to, and again, it doesn't seem to show any green shoots of leading oil possibly higher. I don't know if you remember this when we had, the XLE was banging around, I think right in here. This is back in March 2015. We had oil making new lows. We had the XLE making higher lows, and it was kind of nice that we had a little bit of a divergent situation here to take advantage of, and then that actually ended up kind of predicating oil moving a little bit higher. We don't have that, and we haven't had that on the XLE. That's why I'm just not looking at oil turning around. It's one of the factors. Here's the daily on the XLE. Just a sick situation for longs, and really no reason to really take the trade off yet on the short side. Now, we looked at this on the daily again, getting below this 69.75. We're a couple of points lower. Remember, this thing, it's not on sale. You never should really look at something on sale. Things on the lows go lower, things on their highs go higher. But you want to, take a look at this one. Stops definitely, in my opinion, above 69.75 on the long to intermediate term. But you really don't have a sea change going on here until you possibly will have that new profile attempting to appear situation. And I'm going to go back to my ETFs here. There's the XLE in the gutter, in the cellar still, with all of the breath situations just extremely ugly. Here's the daily. Again, we got a little bit of a gap up in the S&Ps. We're going to talk about that, but a lot of the ETFs started rolling over on a percentage side last week. And here's the situation on our index. Not going to get too much help from the index right now. Again, I think going back to the S&P trade, we're going to talk about this a little bit deeper after the break. But as we go into this one, where's it at? Here we go. We're up 14 pre-market. We've obviously got back into this 2085.50. I'm looking at this as a short opportunity. I know we broke in stride on the 240s. We broke above the top of the box here. I want to wait and see if the market opens and see if we can get back down below 2085.50. And I'm going to look at this as a little bit of a short fence. But I want the market to open now, and I want to see how some of the internals affect our profile breath situations here. We'll be right back, guys.
Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in 1 index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. They always get on me for not announcing these numbers, and I'd love to hear from you guys. Anything you want instantly analyzed. 877-927-6648 for guys in the U.S. who want to call into the show. 727-445-1044. They always get on me. They think I'm holding these numbers back, but there they are. Would love to talk to you guys. I don't give them out because I don't want to talk to you. Don't give them out a lot of times because I'm just forgetful. So one of the things John from Philadelphia just pointed out, I kind of, sometimes don't review what we talked about the previous week. We talked about this 2060 area being a target on the downside, and then we'd have to kind of wait and see what the market's going to end up doing, whether we're going to go back into higher resistance areas or cave down below. But we've been talking about this kind of short side of the S&Ps for a while and not really wanting to take longs. Now, obviously from that 60 area, that weekly unfair low, which we talked about was a target-rich environment, we reached the low of, what is this, 2062, some change? Is that what it was? On Friday, and then had a pretty significant bounce. And I'm not a big fan of buying these bounces. I'm just looking at that as kind of an exit point, those weekly unfair lows that we talked about. And then, waiting for higher numbers to short. And again, talking about that stop game and being able to kind of pick a battle at a ripe area as far as probabilities go. That 2085.50 was a big area that we kind of caved down in below. Now we're kind of getting back into that area. So being out of the market on that, what did that cost? If you bought that bounce, you made 25 S&Ps at this point. But, what we're doing, just so you guys know, is we're taking, and I hope you guys are seeing this, we're taking our breadth information that we talk about pretty religiously when it comes to trading the S&Ps and other indices. And we're taking this and trying to use it to our advantage. And, as we look at this kind of flip-flop, non-directional situation that's going on with our breadth, we really had determined that it was okay to be short, not okay to be long when we get into these levels, if you will. Right now, they're still showing relatively negative. The 60s are starting to pop open here, but the market internals, the stocks within, or the equities within the index itself, are how these are comprised. And as you go in here, you pop this up, you'll see some information over here of how these particular numbers are calculated and where these crossovers. By the way, you guys are getting some really cool additions to this scanner this week. We're kind of matching up our scale back, zoom in charts, and we're also giving some really cool ways to sort based on your columns, and also some really neat ways to access custom lists with some tabs based on how you set those up, which a lot of people have been asking for. Previously, when you go in here, just on that note, you add your list, you save your list, you're able to load your list. It's a little cumbersome to try to access those sometimes, so we're going to basically give hotkeys for all that. Also, don't forget, we've got this kind of automated text situation that basically gives you, in a very easy to use thing that I always go back to sometimes, because I try to complicate things, and the way to have successful trading, a lot of people will tell you've been doing this for a long time, is try to uncomplicate things. So this text basically makes it black and white for me, and I go back to it when I start feeling like I'm getting too smart for my own britches, as what they say around here. So going back to the S&P trade, 2085.50, you got a battle point area. This is a little bit of noise. You got to get, longer term levels, you got to give yourself a little bit of room there. From the bottom, absolutely, we've rallied 25 S&Ps to this point. I love that, how that's acted. So now I'm looking at this, and I'm looking at placing stops. If you didn't catch some of the shows the past couple of weeks, we talked a lot about, how do you know where to put the stops? I mean, the automated systems, depending on what time frame you're trading on, we take a percentage of the height of the box. What does that mean? A percentage of the span of the so-called balanced area or fair auction. A lot of these automated systems will look at 15, 20%, depending on how much room you want to give them. On the short-term guys, obviously, if you're trading on the short-term, this is, again, a good resistance area, 2084.5, 2085.5. That's the 240 and the daily lining up. Let me show you this really quick. I'm going to go into our futures section, and I'm going to pull up the S&Ps there. There's that 2085.50 bottom. See, we're right at the vicinity, and there's the 2084 and 0.625. So there's, that 2085 general neighborhood sitting there. We got the green shoots trading above there. Here's the display landscape chart showing all the levels at the same time. So we're right there, trading above slightly on both of them. And as we look at this, if we wanted to do a sort, by the way, just to flag instruments sitting on the bottom of their profiles on the futures, we got S&Ps, lean hogs. These are all real time. We pay for this. Every single futures instrument that we have on the board here is a real-time calculation. So lean hogs, NASDAQ, Dow Jones, all these are sitting. This is interesting. I didn't even realize this till I did it. So right now we're at battle point areas on the S&Ps, the NASDAQ, and the Dow futures, real-time, pre-market. So let me just verify that. I found that almost hard to believe. Here's our NASDAQ futures. Yeah, we're in the vicinity. What this does is it flags you. This is really nice to see this, actually, at the same time the S&Ps are there. It flags when we're within a 10% variance of this inflection point up top or inflection point down below. So it'll let you know we're getting to the bottom, and that's kind of the flag that it's putting in front of you there. Here's the Dow, and again, we're in the vicinity of the bottom, within 10% range there on those inflection points. So here's a long term on the Dow, by the way. All right, so let's go back to the S&Ps really quick. So we're continuing to climb this morning, but I'm still considering this a little bit of a noise area that you're going to have to pay attention to. Now, what's going to happen on the scanner? I'm going to go back to my indices finally, and I'm going to go back to my breadth. When the market opens, it will probably be prudent to pay attention to how this, as Tom would say, shakes out. When these things start populating, a lot of these stocks aren't open, so these numbers are going to change. And as you can see, the 60s are starting to change already. But you want to pay attention to this. And if you get stopped out of the 2085 general area up top, relative to noise levels and all other things considered, if we get back down below that area, it would be, in my opinion, okay to get back in the water. You want to pay attention to these speed dials to see how the breadth of the marketplace is relative to profiles on the internals. Now, we're kind of talking about day trading here. A lot of times we're talking about preparing yourself for the day if you're going to sit in front of these screens. The long-term guys really should pay serious attention to this weekly. This is the one let me get this reset. This is the one that's been negative basically since around the June 4th area, and it hasn't really had a lot of mitigating instances where it's crossed back over to positive. So right now it's still negative. That's important. That's important to say two things. One of them, that we're still looking at selling resistance, and the other thing is that we're very, very non-directional at best here as we look at these S&Ps almost on all-time highs again. So a lot of information you're gleaning off of that, hopefully, and that's the way we're looking at that. Let's take a look at Apple really quick. Obviously, this thing, to some degree, drives the marketplace. I think it's 13 to 14% of the NASDAQ. I haven't looked at the latest calculation based on market capitalization. But there's some cool things out there with Apple. I mean, Larry called this around 115. I was like, yep, that's a good call. And we have kind of rattled around there. But what do you do now? Here's the long term on Apple. We had the breakage, again, 124. This really neat situation where we traveled the entire fair auction on the long term in 1 week. And then we kind of went back and retested that level. Remember, support becomes resistance on breakdowns or breakouts. And now what do you do? So, and if you go back on Apple, the kind of sea change that's going on, if you look at it kind of relative to profiles, we've talked about this a little bit. Sorry to bore you guys if you're tired of hearing the same argument, but this is a sea change event, what happened the past couple of weeks. And the cool thing is now actually you haven't had long-term reasons to really completely scale out of this. I mean, we're trading 116.5 this morning, but you got a profile on a daily that's appeared above. That's bearish in nature. And the 240s, you still haven't busted up back above the regulation of the trade down, as I like to call it, on the 240s. Now, you got a really big wide box. You had the orange bar. You got a new profile, new demand area. So what do you do with this now? I think since, and Larry called this very well, you've got a situation that you more than likely could, on a short-term basis, just sit tight, wait for new information to appear. And I know this may be a sit tight 3 levels up, but right now you're just sitting in no man's land on the short term. On the long term, I still think you're okay on the short side. You got, lower lows. You got lower lows on price action, lower lows on Navigator. You've got that profile appearing above, which we all know is bearish. And you don't have any new, profiles attempting to appear here. The ultra short term, you've got some resistance around 117, 116.97. Any short-term trades above there, you're going to have to more than likely look at that as a stop-out situation. Let's take a look at IBM. I hope this thing just gets hammered for a lot of reasons, some personal reasons. But anyway, we're going to take a look at that's a whole nother show that I could talk about that. But let's see where we're at pre-market here. 157.50, got a little bit of a bounce here with the market. I love it. We'll take a look at Disney in a second. I think that's what that means, right, Al? Okay. we're going to take a look at Disney. IBM, that was the 240 situation. This is the daily. I don't see anything in danger here, even though we've got a little bit of a pop this morning. I'm looking at any rallies in this stock, new chances to sell. Just don't see a lot of reasons to take this trade off right now. I'm going to just try to stick with my guns here. This has been a really sweet situation since we broke recently below that 167 area on the weekly. Let's take a look at Disney. All right. So another really kind of cool thing about these levels is, we talked about, we had gotten last week, and this is last week's weekly bar. Let me see here. Yeah. We talked about last week, when that initial reaction came out on Disney, we got below 111.46, and we talked about, the only way to, I'm not bullish on the marketplace. Therefore, I'm not really looking for long opportunities that often in any stocks. But when the announcement came out, we were kind of like trading 111, 110 immediately. And we said, the next level down on this, and we talk about also not trading before these announcements. This is a prime example of why you don't throw the dice before these announcements. This thing got slammed for about, 17, 18%, something like that, ultimately. We talked about 105.02 was the level down here to pay attention to thereafter. So we reached that level. We reached the low of 104.24. 75 cents off of a massively volatile situation. And that noise factor, this is another good example of noise factors. Got to give yourself a little bit of room there because these long-term volatile trades, these volatile trades combined with the long-term inflection points are not normally to the tick. So what do you do with this now? We caught a good bounce off of that, but they're kind of, again, patiently wait type battle point areas and high probability areas. So that was we talked about that ahead of time. So what do you do with Disney now? 109.35 in the middle of a fair auction on the weekly, and really still not showing any new profiles attempting to appear on the daily. Here's the 240. We're getting back up into unfair lows on. We're getting back up into unfair lows on the 240, 110.79. I've talked about a lot of different levels on Disney right now. The fact of the matter is I like it that it's gravitated back up off of that 105 into 110.79. Pre-market, we're sitting below this 240 profile. Long term, still bearish. Short term, from a day trading standpoint, I think you've got an opportunity around 110. We've already kind of opened up and sold off. Stops above 111 on this stock, and I think we could revisit 105 pretty easily. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Looking at Amazon, just seemingly get a ton of emails about this one. 526 trading pre-market. Here's the situation on the daily. Nothing new there. Guys who have got to get into this thing and not miss the train, so to speak. I advise against this. 522 support on this. Got a new box appearing. This is not good actually. So again, I'm thinking we're going to head a little bit lower. You can possibly scoop this up a little bit lower. And remember, 493 was that breakout area. If we get down into that area, that's going to test some people's will to hang in this stock. But right now, still not a big fan of going short or going long this one. Let's take a look at Netflix. Can't seem to talk this morning. Interesting thing happened Friday. Not been a big fan of doing anything other than saying not the stock to be short. Had the yellow bar appear, which as we all know is pretty much going to predicate a new profile appearing today. New supply area up top. That's going to be, I think, a time that you could now look at this from a standpoint of taking some weight off on the Netflix trade. And why are we talking this way? Because we go back into let's just go back to the S&Ps really quick and the NASDAQ. We've kind of rallied back up into a level. I think we may have some resistance on the S&Ps, and that's kind of coupled with the NASDAQ situation that we've kind of gotten back close to these levels on the NASDAQ also. 4560 was that big level we talked about. We're not there yet, but we could get there pretty easily, and the S&Ps are kind of in that same situation, as well as the Dow. You got some resistance here. So It's nice we got a little rally off of that 2060 area on the S&Ps. That's kind of nice when that happens, actually. You're out of the market, you're happy, you wake up, you're considerably higher, and you're at some resistance levels. Doesn't get much better than that as a trader. Staying in trades overnight right now in these indexes, again, we've just kind of talked about not doing that, not throwing the dice overnight, especially with an index. This is another good prime example. We're up 13, 14, 15 points. So oil, we talked about that. If you missed the first part of the show, nothing crazy to kind of hang your hat on about any bounces right now. Gold, we're looking for breakdowns below 1081 or rallies up into 1112. Long-term traders are kind of sitting here in no man's land. Not a lot of direction. Could get chopped up if you try to play around with it. Here's the short-term numbers getting back down below 1095 on gold. All right, let's take a look at the 10-year. We haven't talked about this one much, but again, we talked about this 127.11, 127.14 area. We've come off that a little bit this morning. I'm not a big fan of shorting treasuries, even with all the rhetoric out there. They're not going to pull the trigger on this, folks. I mean, it's just not going to happen. You know, they're going to let this thing. And to be honest with you, I love the way the 10-year is acting on a long-term basis and just kind of hanging around these areas that we talked about from this target-rich environment on the long side. I'd love to see this thing make another pop and then make another run up. Here's the long-term on the 10-year. Again, had a close above here last week. We're just kind of hanging around these 127.11, 127.14. We're trading 127.08 right now. Don't like shorting the 10-year. Look for long opportunities still on the 10-year U.S. Treasury note. Guys, it's been great. Larry's next. Stay tuned. The deck is stacked at TFNN.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.